Hi guys. So the third time I'm trying to make this video, I keep forgetting to unmute my mic. So looks like we fell off a cliff today. We did not. We haven't even touched the 50 yet. Until we lose the 50, we're still on an uptrend. And even after we lose the 50, doesn't mean the end of the world is here. This is what a crash looks like. This is the tariffs in April. We had a 30% correction right there because we lost the 50. As soon as you lose the 50, and I mean really lose it with volume, that's when you can start saying it's a crash. Till then, correction. So you see here, came down, touched 50, tested it, went right back up. Touched 50, tested it, went right back up. Touched 50, went right back up. Right? And you'll see that's always the case unless we get a real crash. And look when this is, December of 21 to October of 2022, the Joe Biden stock market bull or bear market, where it paid to be a fucking short seller, and everybody said that was the end. And even then, we continued on, right? Never assume that the market is crashing unless the conditions are bad enough to make you think so, right? Like when tariffs were happening in April, that was an obvious gotcha, right? Which is why the day Trump said it's a good day to buy, here was the bottom and we went right to the top, right? Like the market freaks out and it comes down during times of uncertainty. So we have uncertainty with unemployment right now. That does not mean the stock market is crashing. It doesn't. It's not good, right? But we expected this with AI. We expected this. Corporate margins are just improving. So if anything, like the stock market should just get even better. But that doesn't mean that the world's in great shape just because commodities are flying. Now they're almost guaranteed to cut rates now because of this. So that helps stocks too because they cut rates, there's more liquidity in the market, and then they're talking about the stimulus thing. Who knows if that happens? There's just a lot of opportunity for more money to come out now. So, yeah, long story short, don't freak out, okay? I know I warned all of you about this. I told you it's gonna be a correction, but you're gonna see all this doom and gloom online. Don't lose your shit. It's okay. We're looking to buy tech and stuff again when we get down here. We start accumulating when we get down here. Until then, we don't touch, you know, the Nvidias, the AMDs, the Microsofts. We just stay away from that for now. But just because the SPY and the Qs are crashing does not mean, or crashing, whatever, correcting, does not mean the stock market as a whole is just going down. The thing is, most of you guys only look at the big name stocks that everybody knows because that's what you know. But there's always an area of the market that's ripping while the SPY and the QQQs are selling off. So, for example, if you saw this correction was coming, you could have probably put some money in gold, right? And you can see gold had a real green day. Had a real green day. Huge move for gold right there, right? And we just got back above the 50. So we're most likely at least going to go to here. So you could take a trade on gold right here up to the top of this range. Pretty safe bet, right? Not telling you to do that. I'm just saying the entire market's not getting decimated. Gold usually pops because it's a hedge, and we see that money, money's the dollar is not doing great right now. Okay, so which again is good for assets. So you got that. You guys saw this today, right? You saw USAR come down, took off. As soon as we started seeing selling everywhere else, this thing rocketed. So apparently rare earth is being treated just like gold now, which not surprising. Sort of like a commodity play, right? However, I'm gonna tell you what I think is gonna happen. So this is the trade for me this year. I'm pretty certain this is the one that's gonna pay me. Eli Lilly is part of the healthcare industry, and the healthcare sector is like 10% lagging. Like it's 10% down on the year while the rest of the stocks are at like all-time highs and stuff, right? So it would make sense that during this period of time when people are trying to figure out where to put their money, that we're going to get a pop in the stuff that's down to catch the market up, the market as a whole. So typically you'll see rotations into healthcare, utilities, stuff like that. But healthcare hasn't been happening this year because of all this shit going on with this administration and stuff. However, this stock is not really a healthcare stock. They sell a fat loss drug that is like highly sought after, and they make a killing. Blah 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 blah. Okay, I can bore you with all the financials. You guys can look into that yourself. We can just glance at it real quick here. Let's see what their earnings was. $13 billion in a quarter. Okay, and adjusted EBIT. I mean their earnings per share is $3.34 per quarter, and they're outpacing what they expect, and they're beating earnings pretty good, pretty consistent numbers. 13 billion there, 12 billion there. Yeah, so I mean they're growing. You can very clearly see the numbers are getting bigger as we go here. So this company is showing good growth. Now I'm not just going off that. There's a lot more you guys can look at, but hear me out. Healthcare sector is at 5-year lows. This thing, through all that, considering, has stayed up pretty good. But you have this range we're trading in right here between 806 and 764. But anytime you drop under here, you should be looking to buy. And I think we're probably going to get under here again one more time. It's looking like it. I mean, we technically are now, but I'd be trying to buy somewhere down here, right? Between like 735, 720, somewhere in there, right? Bottom of this little shit. Anywhere in there, I'd be looking to load up. And with enough patience, this thing is probably going to $1,000 because you got this going on. All right, well, I'm just going to do this quick. That, for those of you that don't know, is bull flag, right? And then we might come down here and then come up here and then come down here and then come up here. Like it might happen a couple more times, right? It's going to take patience. I don't know when this is going to happen, but eventually there's over an 80% probability with this pattern that you're going to break to the upside. You have a company that's extremely profitable, and they've been slammed down due to the narrative of the industry, not the fundamentals of the company. And it's literally an analyst projection. So even analysts, like the average price target's 989, the high side's almost 1200, and we're sitting towards the bottom end, like the bear case now. So even from a analyst perspective, it's a pretty good value right here. But we want to get it down here, right? Towards this bottom part of this range. And since we're in this volatile period right now, it's a good chance we're gonna come down here. And while other stocks are cooling off, I think we have a prime opportunity for the healthcare sector to start catching up. And the measured move here, if we take this full range, right, let's say we break out here. This is a really rough. There you go, just about $1,000. So there's a lot of indication that we're gonna get there, and also we're at the bottom of this this consolidation. We're at the support level, and there's nothing fundamentally with this company to push it down here. Like it would take a huge piece of bad news to come down here, because the high was already at $1,000, right? And it just ran up so far so fast that it needed to cool off. So this has been its correction, right? And it may, it may keep going for a little bit, but eventually it's going to break to that upside. And I think considering the current valuations on the healthcare stocks, this is a really, really, really good trade for those of you that are patient. Something you can stick in your Roth or dollar cost average into because it may stay down here for a while. You don't have to buy whole shares, you can buy partials. So even if you only put 25 bucks a weekend or whatever, while it's down here in this area, not a bad idea to be accumulating. But if you see it under 735, I mean, bulk buying it would be a really safe idea because your downside is limited. The lowest this thing has come is 710. Even if we come down to the bottom of this thing, you're talking about like $50 a share. So, I mean, that's not nothing. Don't get me wrong. But again, the financials are amazing, and we have a healthcare industry that has just been priced to absolute failure. So it's held up through all of that. This is a really good play. Yeah, so I'm gonna be looking for a buy on this week. Hopefully, get into this guy, and I think this could pay us by the end of the year. I do. Um, yeah, that's about all I got on this guy. Um, I'll be looking for opportunities as we go here, but as I said, you shouldn't be looking at your main brands here. Shouldn't, not quite yet. Anyways, AMD's got a ways to go. Nvidia's got a ways to go. Like, you're really looking for them to come back and touch the 50 because they haven't in forever. And it doesn't mean they will. Sometimes demand's so good it just doesn't even get there. Like today with Hood, we couldn't get there. We couldn't get there, and the dip got bought immediately. Doesn't mean it won't get there. I'm hoping it at least comes down and touches this right at 85 bucks. That's where I'd be buying. But yeah, just kind of showing you guys some stuff I'm looking at. Something crazy that happened today. Never seen this before. What the fuck? 20-year yield. Okay. 20. Yeah. Yeah. Maybe it was the 10. It was the 20. Sorry, guys. So this is a huge, huge move in yields. This is because of the unemployment, and they're pricing in rate cuts. That's what that is. So if rates get cut, the percentage yield on bonds drops, right? And you can see that confirmation by looking at TLT, which is junk bonds. You see we got a nice pop there today. So, yeah, that's pretty much confirmation that we're almost guaranteed to get rate cuts. One guy decides that. So if he wants to be a political asshole and fuck over all of us even more, even longer, like he has been forever, he could. I can't guarantee nothing, but the data, I mean, we got a double bottom on yields here. It's just, it's looking pretty likely, right? I don't want to tell you guys to trade TLT because fucking these bonds suck. I wouldn't want to own them. But there might be a good trade here. If you're in and out of it, you could ride this from, possibly up to here. But I wouldn't touch it. I wouldn't do that. But anyways, this is just confirmation that we should be seeing rate cuts in September with that job data today and this and the bonds taking a crap like they did. I think like it's probably almost a certainty. So, um, yeah, just kind of doing a little update, trying a different kind of video. Let me know what you guys think. If you want to see more of this or maybe more structure to it. Just thinking about doing like daily recaps to try and teach. Thought maybe that would be helpful. So let me know what you think of that. And yeah, see you later.